Hello and good evening, everyone. Today's webinar topic is Demystifying Municipal Bonds Opportunities for Investors and Issuers. So, for this, we have with us Venkat Krishnan Srinivasan Sir, founder and managing partner, Rockford FinCap LLP. Srinivasan Sir is a veteran of India's bond market with over 30 years of experience in Indian rupee bonds and debt capital markets. His career spans guiding debt transaction from organization through execution, consistently delivering successful outcomes. Before founding Rockford FinCap LLP in late 2021, Sir has served as Senior Vice President at ICICI Securities Primary Dealership Limited until June 2021. Now, a short glimpse about NISM. NISM is a public trust established in 2006 by SEBI, the regulator of the securities markets in India. The institute carries out a wide range of capacity building activities at various levels aimed at enhancing the quality standards in securities markets. Now, before beginning the session, I would like to request all the participants to note some important points. First, question will be taken at the end during the Q&A segment. Second, all participants will receive a participation certificate within 3 to 4 working days. Third, the recording of this session will be available on NISM YouTube channel. Now I request Sir to begin with the session.
Hi, good evening to all. Thank you for attending this seminar and thank you NSIM to invite me for this seminar. This is a good topic actually, which is very upcoming and very important in today's environment where municipal bond is becoming imminent and important fundraising opportunity for the municipalities. So now you see that, we will see the overview what these sessions will cover. Why India needs municipal bonds now. Because see, you would have seen in recently in few days before the news article in Mint talking about the floods or I would say waterlogging in many areas across India, especially even places like Connaught Place in Delhi and in several other places. Where even in big cities, for example, even in Mumbai, if rains happens heavily, many places gets waterlogged and everything. In spite of, for example, Delhi is rated triple A, Delhi Municipal Corporation, and even Mumbai BMC is rated triple A, but still, a lot of urban infrastructure gaps remains actually. So we will see what are the main gaps there in spite of irrespective of the rating of the respective or whether they are cash rich or they don't have, they need money or how they are getting funds from the market and how the municipal bonds can help them to make sure that they get the funding need from the other sourcing model, financing models also. So now, what are municipal bonds? We will talk about the key features, what are the types, structures, and the evaluation of the Indian municipal bond market. And we'll also talk about insights from few municipal bond issuances, how they have performed. I just talk about only two. And we will also talk about the role of SEBI and Ministry of Urban Affairs in how they have pushing these municipalities to come out with the bond issuances to raise funds from the market, and what are the regulatory frameworks they are given, and what are the incentives they are giving to bring with the municipal bond issuances, and by which how the municipalities can get very low cost of borrowing because of the incentives. And we will also talk about what is the investor and the issuer perspective. Here, the issuer is municipalities and challenges and the way forward. We will see that what are all the challenges, what all structures we can do, how we can deepen the municipal bond ecosystem. Now, the objective is to equip the participant with a comprehensive understanding on how municipal bonds can unlock Indian infrastructure future. This is very critical to understand because everyday life, we are seeing a lot of problems in every city. And we will be wondering what is happening, why the local municipalities is not even able to solve a small problem, even a pathhole. How much time they take to make, fill up the pathhole and everything. So now, what are the India's urban infrastructure challenge? Let us come to that now. Let us start from here. So India's urban transformation is accelerating. People from smaller cities, villages, semi-urban areas, everybody is moving to now for a want of jobs, or they want to come and live in urban areas. They have been continuously moving from other places to the main city. So with over 600 million people projected to live in cities by 2036 and to exceed 814 million by 2050, then you can think of how the urban areas is going to be populated severely, and urban regions already contributing more than 60% of the country's GDP, which by 2030 is expected to rise to 75%. But at the same time, the pressure on infrastructure is mounting. People are keep on coming to urban areas, but whether the cities or urban areas are able to manage all the population at one time and what all facilities they're able to give it. As I talked earlier, recently India's national capital, New Delhi, Connaught Place, was submerged after heavy rains last city and is the national capital. Think about it. Bihar capital, Patna too, got severely affected due to the heavy rains. And every year, specific areas in Gurugram, Mumbai, Bengaluru, Chennai, Pune, and seems to be routinely affected during monsoons and heavy rains. The problem is that low-lying areas, and people are constructing illegal constructions, or whatever they get permission from a low-lying area where the lakes used to be there some 50 100 years back. There they're constructing houses, or there is no proper sewage system is there because they keep on constructing houses across. They keep on expanding the cities, but at the same time there is no proper provision of sewage system and how the rainwater is going. So that is the biggest problem we are facing in today's context. So, we all know why this happens. We are seen in a day-to-day life. Even you are near to a house area when, rain happens, is a havoc. Even crossing the roads becoming a very big issue. So what are municipal bonds? So municipalities are traditionally depends upon central or state governments to fund them through grants. So what happened is that both central government and state government are giving them grants to each and every municipality. And most of the municipalities feels that, okay, we are getting grants and we are also levying taxes, house tax वगैरह हम कर रहे हैं, plus we are getting some more income from parking areas or whatever, public conveniences they construct and charge them and everything. They feel that they can manage. But that is not enough in today's market. When urban population keep on increasing, they are not able to provide, adequate facilities to the public. Thereby, they are not able to manage, and thereby, even if you don't provide a basic amenities of sewage system, then you can think of what happens during rainy days. Then what rainwater get clogged in, and people struggle till the time it get pulled out and everything. So subject to governing laws, municipalities can borrow from commercial banks, financial institutions, and also through issuances of bonds or debentures. So I'm sure most of the participants knows what is bond or debenture is called. See, in simple terms, I can tell you that, for basic layman language, people are borrowing funds from a generally, traditionally used to borrow funds from the banks. We call it as a term loan. In case if they want to borrow funds from the market intermediaries, even including commercial banks or mutual funds or provident funds or other financial institution, through a market instruments, is not an equity, is again a loan. Okay, they borrow. So we call it that market instruments, whether we call it as a bond or a debenture. Okay. So municipal bond are non-convertible debt securities. Non-convertible means it cannot be converted into equity. It will remain as a debt issued by urban local bodies to fund infrastructure like roads and bridges, slum rehabilitation, public health, water supply, sewerage, and waste management, etc. So basically, they need to fund, they need continuous money to come in to maintain, construct new facilities for the public who has been moving out from villages to urban areas, and make sure that it is well maintained, and for which they need money. Only they can't manage with only the grants received from central or state government, or they cannot manage the kind of taxes we are paying to the respective municipality, which is very, very meager, very, very small amount we are paying. With that, they cannot manage. That's why, every April they call you and tell you that you pay it, we'll give a, 10% uh, subsidy, it's a discount if you pay it well before and everything, because they need money and they want to utilize that money as early as possible. That's why instead of delaying it, they're requesting you to pay it before. For that, they are giving a discount. So now the classifications of municipal bonds. So municipal bonds can be classified into two. One is general obligation bond and second is revenue bonds. Where general obligations bonds means some municipalities have a lot of money. They don't have to bother with their very big cities and they get a lot of money. Where the money flow, inflow, cash inflow is good. So thereby the principal and interest are services through tax proceeds of the municipality. They don't have to do any structures or something else. They don't have to wait for any grant or something in order to repay the principal and interest. Such bonds are issued for any purpose, general projects for which operating revenue is not generated. So, for example, if you want to make a, city may, if you want to make a park, you don't expect, operating revenue from that park. It is for the public use. So for that kind of a project, they can use. This is called general obligation bonds. Revenue bonds, it is basically serviced by specific project income. Debt securities are services by revenues from one or two projects. So they identify a few projects and they construct a project. For example, a road, internal road they are making, or they making a, parking facility. Multiple, nowadays you have a multiple parking facility, where car can be parked, more than 100 cars can be parked in a small place through lift system and everything, where they charge around 30 rupees, 50 rupees, something of that type. So where they know the revenue stream, they keep these kind of places at a very important places, and then they start having a revenue stream. So majorly the revenues come from, for them, it is from the, tax revenues, for our house tax revenues and everything. So bonds may be listed through public issue. It is preferable to issue through public mode, or it can be issued through private placement also. Mostly they are structured. They make sure the money can be repayable, and they give a lot of escrow accounts on property tax collections and everything, so that your money is more secured. So majorly they do make the bond secured by a structured mechanism. So, or if they have any buildings, etc., that also they pledge and do it, but that is very, very rare. Mostly some of the bonds in municipalities, if you see, that try to keep unsecured only, but through structured mechanism, they make sure the bonds are well secured and is able to repay the obligations. So it may be noted that municipalities derive revenue from property tax, toll tax, advertisements, parking contractors, and other miscellaneous receipts. So evaluation of India's municipal bond market. So the first municipal bond is begun in 1997. Bengaluru was the first one to issue 125 crores of issuances. And after that, the market remained dormant almost for 2 decades. Maybe few issuances out of, 1997, you can think of almost where we are. Almost we are going to be, 30 years is going to be now, almost 28 years. So very, very few issuances till 2015. Okay. So then the government has thought about it and they said that we need to revive this municipal bonds, and every municipality should understand the purpose of issuing municipal bonds. But unfortunately, the problem was that most of the municipalities are not educated about the bond market. Frankly speaking, even in India, everybody knows equity. Equity बोले कुछ पता नहीं है, share market. So, even equity, they don't understand, many people. Share market bolega to everybody understand very clearly. So if you don't understand what is equity and what is share market, dono ek hi hai, but people don't understand, then you can think of that how many people can understand about the bond market or a debt market or fixed income market. तीनों एक ही बोल के समझ में नहीं आएगा उसको. So these are all things, has to be educated. And think about a municipality, it's in each and every corner of the India, and you don't expect them to know about what is a bond. So first of all, the respective municipal staff has to be educated. They have to be trained, and they should know what are the procedures to get into issue a bond, and how to list the bond, how to receive the money, how can you utilize it, how can you account it, and how you are going to report it, how much money has been utilized or not, and how you are going to pay the interest and principal on time. Everything has to be, inform them, or we have to be given a proper education for respective municipalities. So a revival began in post 2015 when SEBI notified the issue and listing of municipal debt securities regulations. So combined with reform-oriented program like Amrut and Smart Cities Mission, the regulatory foundation began attracting municipalities back to the market. So this has helped, the Amrut scheme 1 and 2 has helped municipalities to come to the market and borrow very, very cheap funds. I can tell you one municipality has bought it at 7.15% for a 10-year paper, of course, semi-annual. And with the incentive received from the government, the overall borrowing cost has gone down by another approximately 2%. So no other institution in India, including a AAA PSU or in any bank loan, can give such a low cost for a municipal market borrowing. Of course, it is including the incentive given by the government, but net you see that market can give only the market rates, but because of the incentive what has been given by the government Amrut scheme, they're able to get a very lowest rate in the market, and thereby you are able to attract many more municipalities to come back to the bond market so that they can reduce the overall cost of borrowing. So as of 2050, 25, starting from 15 to 25, in 10 years, 23 municipal bond issuances have been completed under SEBI's framework, mobilizing a cumulative of 3358.90 crores. See, if you see that array only 3000 crores, but actually for a municipalities is a very big amount. Municipalities generally need 50 crores, 100 crores, 25 crores, 200 crores, maximum 500 crores. Very big municipalities can try and do it. And government has decided to first issue the those municipalities who have rated AA or above. Why? Why only AA rated and above? Why not the lower rated thing? Because first of all, the lower rated will say, "Arey, these people of AA, AAA, everybody is there. They are not rising. They are asking us to rise first, and they don't understand about the bond market and everything. Let them first price it and then come back to us." That is one issue. Second thing is that market investors will not come immediately for a lower rated bond issuances unless until the municipal bond issuances deepens further. Number two. Number three is that the cash rich people can immediately, adapt many things. For example, most of the main problem in the municipalities is the accounting system. The accounting system is not, unless until the municipalities, change their accounting system and, do the accounting system as per the SEBI standards, as per the rules and regulations, it is very, very difficult to issue a bond issuances because people should know that how the particular municipalities is performing and where the money is coming from and how the money is getting, the receipts are properly accounted or not, and everything has to be there. So now you can understand that even those only 23 municipal bond issuances happen because most of them, almost I would say 100%, but maybe 90% are above or AA rated and above. Even though most of the people may not need money, but because of that, they want to deepen the bond market. Initially, the government has requested US Treasury to help six municipal bond issuances, the first six municipal bond issuances, to make sure that everything goes smoothly and the respective municipalities are properly educated. I think two or three only happened as such finally. So, but if you see the cumulative amount of 3,358.90 crore, it itself is very big comparatively because the requirement of the municipal bond issuances itself is very small because they need 25 crores, 50 crores, 100 crores, I told you before. So what is the SEBI ILNDF framework? The framework introduced mandatory credit ratings. Each and every credit ratings, they need to have any listed bond. SEBI very clearly said if you are getting the bond listed, credit rating is mandatory. So whatever sometime I talk about these things, that is also allows for the normal bond issuances also. For any bond issuances, any listed bond issuances, credit rating is a must. That you should understand. So here they say mandatory credit rating, structured repayments, best accounting practices because and public disclosures, because they know very well that municipalities accounting process, most of the municipalities accounting practices till date it is not very good. So they have to first update their accounting as per the standards and then come to the bond market. So SEBI also issued green bond framework in subsequent, because see, municipalities, each and every requirement of infra is under coming under the green bond framework. Because see, if you can see for ESG, for example, social and infrastructure, or for green bond, anything you see that most of the municipalities requirement are ESG based or green bond based. So in 2024, this is for a generic bond issuances, not specifically to municipal bond issuances. Public issue, anyhow, you know that minimum is 10,000 rupees. So everybody knows across, minimum denomination, they keep it at 10,000 rupees. But SEBI has thought about it, and 95 or 97% of the total bond issuances are happening through private placement mode, which is being offered only to institutional investors, and only the secondary market retail investors are able to invest in such bonds. Here, for retail investors, maybe minimum of 1 lakh used to be there. So there could be a lot of problem for retail investors to invest one bond in a single bond, basically. So SEBI has said that, okay, besides 1 lakh in private placement, if any private placement authority, if you want to issue a 10,000 rupees denomination, they can also do it. It's an option they are given, subject to appointment of a merchant banker and other necessary due diligence like public issuances. If you can do that, they say that you can also issue 10,000 rupees face value through a private placement board. Of course, it has to go through secondary only, but still, at least the investors have the option to invest in 10,000 rupees denominations. So the Ministry of Housing and Urban Affairs, also provides, ULB's rising bonds. This is a very, very important. That was talking about the incentive, how the municipalities are able to borrow at a very low cost. You can see what all the government has done it for the municipalities is very, very astonishing, and is very, very encouraging for the municipalities. USB's rising bonds for the first time shall be eligible for incentive for 13 crores for every 100 crores. Basically, for every 100 crores, 13 crores of incentive they are given. And of course, they can go up till 200 crores. That means they can get maximum of 26 crores of incentive. That means they can issue up to 200 crores. However, let us assume that there are few people who have already raised the first few issuances, or raised up to 200 crores and availed the 26 crores of incentive. Then what next? Now SEBI says, okay, you have done that. We are giving you some more incentive if you can issue a green bond. You have to meet the definition by SEBI, what is a green bond. And for such cases, we are giving you 10 crores for every 100 crores. And again, it can be up to 200 crores. Now you see, first thing, they are giving a normal bond, 26 crores of incentive for up to 200 crores. Here, if we issue a green bond, they are giving a 20 crores for a green bond. Now, if we see reform-based incentive also, they are giving. So, as I told you, there are a lot of very small municipalities are there. They may require only 5 crores, 10 crores. It is waste of time to issue a 5 crores, 10 crores municipal, bonds to bond market, and not many people will come also. That is the biggest problem, and the rating can be very low also. So for such thing, what the MOA said that, okay, if small municipalities are can't rise for single amount, less than 25 crores. Abhi Gandhinagar issued 25 crores of bond issue, private placement separately. So we can assume less than 25 crores, 4, 5 municipalities or 10 municipalities, they can pool within a state. Okay, don't go beyond a state. Within the state, they can pool 4, 5 municipalities, 6 municipalities, and you create a state level entity, SPV. Okay, and uska company ka naam kar lijiye, and multiple ULBs ka you bring it inside that and issue a bond. Again, they are giving 13 crores for every 100 crores, and this is capped up to a 500 crores worth of municipal bonds. And also, further, they gone ahead further, they said that if you want to use this fund for development of renewable energy and energy efficient projects, an additional incentive of 5 crores per 100 crores worth of bonds shall be allowed, subject to terms and conditions. So these kind of reforms and incentives they are given. So that has definitely, pushed the municipalities to issue bonds through private placement or public issue, and get the lowest rate possible vis-a-vis compared to the traditional bank loans. So now let us see about the recent municipal bond issuances. So as I told you that 23 municipal bond issuances have been completed, mobilizing at 3,358.90 crores. And also, if you see the first quarter of this fiscal itself, okay, I'm talking about till June, 575 crores has been raised by six ULBs like Agra, Prayagraj, Varanasi, Greater Chennai Corporation, Pimpri Chinwad, and Gandhinagar, and many more. For example, I told you that Gandhinagar has issued only 25 crores. Then you can think of 575 crores itself is a very big amount for this such kind of a ULBs. Okay, so and many more are queued up to tap the bond market this year. Even in Tamil Nadu itself, we can see. I heard about Coimbatore is coming and going to tap. Tiruchirappalli is going to tap. So likewise, big corporations or municipal corporations are trying to tap the market. Is going to and it's very very successful. You talk about Greater Chennai is subscribed multiple times. Pimpri Chinwad is also subscribing many times. It's very good to see that bond slowly the municipal bond market and investor appetite is keep on increasing. As I told you earlier, most issues are listed, rated AA, and structured with an escrow on tax revenues. But however, I told you that we prefer public issues so that retail investors can directly participate. Most of the issuances are typically issued through private placement mode. Adding momentum, Suraj Municipal Corporation is not coming yet, is preparing to launch a public issue of 200 crores, including a green shoe option, a major steps that will allow direct retail participation in India's municipal bond market and expanding investor base. Very, very rare. I think the third issue is coming in the through public issue route. I think so. So, what projects are being funded? So, as I told you that, initially I told you what all problems are there. Main thing I would see that sewage treatment plants, water supply systems, drainage networks, solar energy and energy efficient street lighting, etc. So, if you see most of the streets now they are putting solar street lights, which is very good actually. You need not consume electrical power and everything. So, just the cost of the solar is enough. So they are able to do this also. So these green and climate resilient projects are gaining attention. That's why I say that most of the streets I can see now solar lights is coming now very good, very well. So so this also the MOHUA is trying to give incentive for the green projects also. So case study, let us come to the case study. So this is Indore Green Bond. So Indore Green Municipal Corporation has issued 245 crores green bonds in 2033. It was a public issue and retail investors availed the chance to participate. It was rated both AA and AA plus. I think it is AA plus by India Ratings and AA by CARE. So it was oversubscribed by multiple times and the funds was utilized to set up a solar power project. So, and second thing, and the security. Security structure is that they said we will give you the money, the first pariposi charge on present and future receivables pertaining to own revenues like tax revenues, rental income, etc. Charge over the escrow account, whatever the receivables are coming in, they put it in a separate bank account and that is fully escrowed. And whatever money is coming in is first will be serviced for the interest payments and the principal. Then only the balance amount will go to the municipality. Exclusive charge over DESRA and sinking fund account. What is a sinking fund account? Sinking fund account is basically mostly you can see in zero coupon bonds. So I don't know how many people knows about zero coupon bonds. Zero coupon bond is basically a bond where there is no coupon payments. However, the bonds are issued at a discount and you get the face value at the end of the redemption period. So, where RBI has told banks to invest in zero coupon bonds only if a sinking fund facility is available. So, what is a sinking fund? Sinking fund, what RBI wants is that respective issuer has to create a separate bank account and has to continuously start putting yearly accruals of the principal and interest amount to that bank account so that in case of any problem, the money can be funded through the sinking fund account. So this municipalities also has to create a sinking fund account. So they're given an exclusive charge over the TESRA and sinking fund account. So let us go to the next one, Vadodara Municipal Bond. This is too much of hype. This is a very good, case study here. Vadodara, they were the second Indian city to issue a municipal bond with the assistance of US Treasury Department following Pune's bond issuances in 2017. Vadodara bond issue was oversubscribed by 10 times. Okay, so 100 crores ka, they got around 100,007 crores. And bids are received from 33 bidders. Again, it's private placement, not a public issue. And it was priced at the lowest yield of 7.15. Rating is same, AA plus and AA. Think about 7.15 semi-annual. You can think of what is the bank rate is being there. So even at that time, if you remember currently, a 10-year government bond yield was somewhere around 6.85 or 6.86. So just over 40 to 50 basis point spread में उसको पैसा मिल गया. Plus, you think about the incentive they are getting. For every 100 crores, they would have got 16 crores. So net, I think the net cost of borrowing for Vadodara was somewhere around 5.45 something exactly, but 5% plus. The kind of no other, even AAA companies cannot get that kind of overall cost of borrowing. Fantastic example why municipalities should tap the bond market and how cheap they can get even for a AA or AA plus rated issuances. Of course, this bond is issued on a private placement basis, and this is equivalent to general obligation bond, no ring-fence revenue available for debt repayment, but aimed at two key Amrut projects of water supply and liquid waste management studies. So this bond actually, they have, Vadodara has been, they did one more bond issue recently also. And they have been releasing how they are issued a bond issue. They release a book and they release a green book for the next green bond ke liye. They're doing a fantastic job to, visualize, you know, uh, visualize how this, how they are it as municipal bonds has helped them to get money at a very cheaper rate, and how they can do. They're given a step by, if you see the book, they released a book. They're given a step-by-step approach that how they have done it and how they become successful, what are all the learnings, how SEBI has helped them, how Mahua, that ministry has helped them, how the, technical advisors, consultants, everybody, how they have, each and everybody has participated to the success of this bond issue. So now we come back to why investors should care. See, end of the day, if you see, each and every one of us as born or brought up or working in some municipality. So we need to have a sense of responsibility for us also that our municipality should do very well, and we should somehow indirectly participate in the improvement of our own municipalities. Okay, let us leave aside that. But municipal bonds offer predictable long-term returns. Okay, because generally, as of today, most of the bonds are rated either AA or above. I told you the reason also why they have been issuing. Government has selected to issue AA or above. It can be a standalone rating, can be A also, but with the structures, what I told you, the DESRA and sinking fund facilities and receivables, they're giving first charge on the receivables and future receivables, etc. Thereby, they can improve the rating to AA or above. So by that, you are very sure that your money is not going anywhere. So there is not a problem. But one thing you should understand that even though municipalities are getting grants from central government or a state government, as of today, none of the municipalities, not about the pool fund, none of the municipalities are guaranteed by either by the state government or by the central government. They are not guaranteed. So please note that it has to be on a standalone basis. Because of the structure only, they are getting AA or above. So one way I would say that because of the standalone rating, the investors are much more happy that, the standalone rating, but the structure itself is going AA or above, and they're very sure about they'll get back their money. So that's why I said bonds are generally structured to make sure investors receive their interest and principal on time. And also with regulatory oversight and better disclosures, most of the risks are mitigated. We know exactly what is good, what is bad and everything, but I advise investors to read those disclosures and the risk, or what are risks are there and how it can be mitigated. And also, most of the, as I told you, most of the municipalities are, they can issue green bonds because most of their projects are green based or ESG based. That is a very good growing opportunity. Our India is targeting, taxonomy and green, zero level we want to bring in. So this is going to be a growing opportunity for green bonds. Retail investors can now participate due to the reduced ticket sizes also. So if it is a public issue also, it's going to be 10,000. And if the municipalities opt to select a 10,000 rupees face value, they can get. Otherwise, it's going to be 1 lakh per bond. So market access is also improving. I told you that from 10 lakhs to 1 lakh for the private placement and 10,000 rupees denomination for public issue of bonds. Option of keeping denomination of 10,000 in private placement too, subject to appointment of merchant banker with proper due diligence. Listing happens on BSE, NSE, so that we can see how the municipalities are performing. The financials are uploaded on time-to-time basis. We'll come to know what is happening in case of any downgrade in credit ratings also is get uploaded. You have a proper debenture trustees who inform you what is happening on their respective bond. It happens, this goes for any bond issuance such as not only for the municipal bond. So institutional investors can bid through EVP platforms, which is very, very transparent. So they get the transparent rate, and green and ESG bonds improve institutional market also, and centralized data on cityfinance.in to improve the transparency and liquidity. NSE ka bhi separately, they have a repository, and SEBI has got a repository, and SEBI repository gives step-by-step approach how to issue a municipal bond. Step-by-step approach. Even a COCA to issue a mandate letter to their intermediaries, that is also given there. And what all papers need to be signed by the commissioner, that is also given there. I'm telling you, each A to Z, if you follow the SEBI repository step by step, you can from the beginning to end and post issuances also, they tell you what are all the things you have to go through and what all things every municipalities has to do. So issuer perspective, we see why it makes sense. I told you that is a very low cost and long-term capital. Even bank loans cannot give. I told you that there's an example I given. So 1.15 minus the incentives, it comes to 5% plus. No other, wherever you go, you will not get this kind of a rate. Reduce dependent on grants. You cannot, अरे मेरे को जब पैसा आना चाहिए, सेंट्रल पे से पैसा आया नहीं, स्टेट से पैसा आया नहीं है, इसलिए मैं काम नहीं कर पा रहा हूँ. ये का कोई दिक्कत ही नहीं. Just go there, raise money from the bond market and do it. And as and when the money comes in, you start repaying it, or you have the receivables for all the receivables are there. From there you can pay also. And improve financial discipline. So by this, what happens is that you have to improve the financial accounts and everything. So, and SEBI and MOA frameworks offer a very, very clear guidance. I told you that step-by-step approach, nobody else can give. MOA has given so much of incentives for municipalities to come to the bond market. You can think of how much government is taking efforts to improve the municipal bonds and visibility of the municipal bonds. So visibility from bond markets improves ULB governance and credit conscious. So they have to make sure that they have to improve the credit rating. If it's an A, they'll try to improve to A, AA, A plus, or AA minus, or AA. Slowly, slowly it can improve, because once your governance and credit conscience is there, automatically your rating improves. Of course, your financial has to be good, and you have to make sure that you get your receivables on time. So what issuers must prepare for? Must undergo credit evaluation, update their financials in line with regulations, developed revenue-backed projects where you get revenues, structured repayment. I told you that escrow or DESRA, sinking fund, etc. Comply with SEBI regulations, disclose project use of proceeds. You have to disclose for what project you are using and for how much amount is required, how much account you're getting from the own this thing or from any grants, and how much balance you are needing for through bond issuances. So, and very, very important, partnering with experienced advisors, consultants, merchant bankers, legal advisors. Everybody has to be there at least for the first few issuances, definitely. So ULB capacity gaps. So, they lack financial expertise. So it takes longer time to complete their financial. Shortage of staff is also there. And tech knowledge is very, very limited. Slowly they are learning. So they have to go with fintech. They have to tie up with some people to make the system robust. For example, nowadays almost robust ho gaya. For example, even online you can pay your municipal taxes and everything. So that much it is very good now that last 10 years tremendous updates have happened thanks to COVID, that each and everybody has become tech savvy, even including individuals like us were able to use online platforms to invest in bonds. So these guys have limited knowledge on bond market. So SEBI and other regulator authorities, ministries, consultants, people, IIM professors, everybody goes city to city and making webinars, seminars, inviting all the people, all intermediaries, municipalities, collectors, everybody to, they literally teach and they tell you what is the uses of, raising funds through municipal bonds, how you can rise and everything. So it's very, very good. Technology infrastructure to issue bonds independently, that needs to be there. I told you already. And I told you about how they can bridge the gaps. SEBI, MOA, state governments can help bridge these gaps. For example, that Chennai Corporation bonds has happened. The Chief Minister himself has come in and lighted the lamp and listing के लिए किया था. So that kind of a support is need from each and every state governments. SEBI has developed standardized repository for bond readiness, which I talked about in detail just now. And what are the challenges? So this is very, very good. इतना अच्छा अच्छा बोल दिया, but there always has to be challenges, right? That's why it is not deepening further. So यहाँ पे no IBC like resolution for if in case of what happens in case of defaults, there is no IBC like resolution for USB ULB defaults. But you can also understand that whatever I think till beginning before SEBI also there are a lot of bond issuances happened in 1997 before that also. So what happened is that none of the municipalities are defaulted till date. That is a one good thing. Okay, but still we want to know that what kind of a resolution procedures in case any will be defaults. वो नहीं है. So that is one thing is major thing people are talking about. Generally, issue sizes are very, very small, which may affect the institutional investor interest. 25 crore, 50 crore वगैरह के लिए, not many institutional investors will show interest. So it will be, only it can go to retail investors. That's why we keep on talking about why you are trying to issue only through private placement, even though time consuming and cost is slightly higher, people should try and do public issuances of bonds. Again, secondary market liquidity, same thing in line with it because the issue size is small. Secondary market liquidity is very, very even in normal bonds also. Secondary market liquidity is very limited. यहाँ पे तो और if you want to buy it, if you want to sell it again, is going to be a difficult task. Poor standardization of municipal accounts में बार बार बोल दिया है ये. This has to be updated first, then only they can come to the bond issue at all. So that is one thing. And low awareness about among small ULBs. उनको मतलब I told you ना share market पता equity भी पता नहीं है, so how they'll come to know about bond market. So that awareness now I'm telling you that this kind of a team that SEBI ministry and consultants and professors, all the municipal bodies people, everybody is going city to city and conducting seminars to make awareness between the municipalities and public. So these factors create investor hesitation despite the kind of regulatory and government support is there. So how you're managing the credit risk? So I told you that no ULB bond has defaulted yet, as most of the bonds are currently rated AA and above. I told you that why the government also preferred to the first few issuances are AA rated and above, and slowly they'll come down the line because by the time if few years if you do issuances of AA and above, by the time you can other municipalities also will get knowledge about it. They'll update their accounts and slowly come to there, or they can use a pooled funds of accounts, then you issue bonds or pooled funds also. So either way, they can try, but that, slowly. And I can tell you that in my time of 30 years, I've seen pooled funds has happened well before also. So now the SEBI regulations have come in. So now you can do that again also. So still perception of credit risk remain high. So, our municipalities, it is not rated, guaranteed by central or state government, paisa kaisa aega. So those things are all there, but I can give the comfort to people that none of the ULB bond has defaulted till late. And the kind of structure they're given and currently only AA and above kind of rating currently happening. And, slowly things are moving from better to the best slowly. And again, that's why I tell you that one of the bond has got 7.15 rate also. That kind of appetite is coming because I'm telling you each and every individual of the respective municipalities also have to show some kind of encouragement of investing in such bonds so that this bond will become very successful. Smaller amount you can put something of that time. Structures such as escrow accounts, DESRA, sinking fund accounts, state government guarantees, though very difficult, I told you, it's not giving. And pooled bond frameworks can help mitigate this risk and build investor trust. So already structures to hai, escrow accounts hai, DESRA hai, sinking fund hai, and pooled bond frameworks bhi hai. Everything is there. So on that basis, if you see that definitely, this can mitigate this risk and the investor credit rating is also improving because of that. Many rating agencies are continuously coming with a report on municipal bond also and green bond framework on municipal bond also, ESG bond framework on municipal bond. So this is going to be very, very good. Okay. So now RISE framework. So there's a strategic roadmap. So R, reform accounting standards and disclosures. I, identify viable, bankable, impact aligned projects. And S, strengthen credit rating, internal capacity and compliance. E, engage with investors, fintechs and regulators consistently. So if you can do this, I am very sure municipal bonds is going to become a huge success and it will deepen the bond market further. So ecosystem collaboration needed. So which is I've been talking about MOVA, SEBI, RBI, and state level entities must align. Already they're aligned, but we need more alignment to make sure together they have to push across. If they can push across, or even central government also can align. And this is going to be a very good thing. I have to admit that both MOVA and SEBI has doing a fantastic job till date. Whatever they can, they have done till date. Something more can come, we don't know, but they have done their best. I have been seeing every places they are going and making a seminar and making an investor education properly. I request everyone who's attending this seminar, in case in your city such thing you have heard about it, please go and attend. You will understand what kind of a effort the government is and SEBI regulators is making. So exchanges like NSE, they're having their own, site where they talk about all these things, what all the process and everything they mentioned it. And platform like EBP, to expand reach, it can go because EBP may, what happen is that people who don't know that I can tell you that, it automatically the messages goes to all the institutional investors, so and so bond has come in, whoever is registered in respective EBPs. So that the reach is there for everybody. Encourage more public issue to reach out to retail investors. We need that. Of course, now online bond portal platform, their OBP is there. They, even if it is not coming through private placement, they go and sell it to retail investors, which is very, very safe. And they are doing a fantastic job again on doing investor education. So finally, I want to say investor education is a vital for long-term growth and liquidity creation. And as I don't have to say that NSIM has been kind enough to do offer this municipal bond courses at free of cost. I think earlier they were doing a free of cost bond. I think now with the World Bank, I think they have again made a course on the aligned with bond, and they're trying to offer a course. I think they can talk about it when my presentation is over. So closing thoughts, municipal bond are not just a funding tool. They are a governance and market maturity signal. Indian cities are at the heart of the country's economic and demographic future, but the infrastructure they require cannot be financed only through grants and subsidies. Municipal bonds, whether issued through public offerings or private placement, are emerging as a vital bridge between capital markets and urban development. This is very, very critical. As we reimagine urban finance, municipal bonds are no longer just an option. They are an essential pillar for building resilient, accountable, and investment-ready Indian cities. We need to scale up this instrument strategically by deepening trust, building replicable models, and aligning urban finance with national sustainability goals. So this I just put in one slide that, in case anybody want to have a look, what is the process to go through? This I picked up from SEBI. So if anybody want to have a look at the process, they can go to SEBI website or I can forward you the link. It gives you the entire step-by-step process, how to reach your goal. And what all the players has to be there. You can see the players, ULB officials, regulators, transaction advisors, merchant bankers, intermediaries, investors. Other intermediaries is legal counsel, credit rating agencies, registrar and transfer agent, escrow bankers, depositories, stock exchanges, and depositories. Everybody has to be there. So for doing a single, even a 25 crores bond issue, you need so many players to come together and do an issue. Then you can think of that, how much effort has to be put in for doing a, bond issuances. And I'm sure that every official will be making sure that the kind of effort they are putting in, they will definitely make this municipal particular bond issuance as a huge success. I think I can conclude with this and I can open for question and answer session. Thank you so much. Yeah, I'm open for question and answers. Thank you. Sahil, you're there?
Yes, sir. Yes. So there are some questions.
Yeah. So even they can reach out to you or reach out to me later also. There is no problem as such in case they have. So I given a broad, thing on municipal bond market. I am sure that the further they go through the lessons or the NSIM what you're having a session on municipal bonds or separately a course. I think that is going to help people definitely. Let me have a look at it. See, this I can, Amarish, yeah, I cannot comment on BSC is having 70,000 crores of fixed deposit. Why the money is not properly spent on infra? They are spending on infra, definitely. I can't say that they are not spending, definitely. And the rating is also AAA. And this kind of people don't need money to raise funds through municipal bond also. Since they're having a lot of cash themselves, they're trying to burn that first. So definitely they are doing. But definitely, all the money they can't spend. So, as and when the requirement is there, they'll be doing it. And you should understand that they cannot give money to other municipalities or other states. Within the municipality, whatever requirements are there, I'm sure they are doing it definitely. So don't think that, these people will go and give money to others. So that is not possible. So they have to spend their money for themselves only. So as of today, unless until if any government schemes or government notification comes in that they can lend to others also, then they can try and do. But as of now, yes, they are doing within the municipality range what they are doing. They're trying to do that. So, where we track about muni bonds on daily basis, is there a best platform to track, buy and sell muni bonds? As I told you that municipal bonds are, majorly illiquid, very frankly. But because the issue size itself is very small, 25 crores, 50 crores, 100 crores, something of that, I told you very clearly. So once it goes, most of the money goes to the, if it is double A and above, even product fund can invest, understand that. So once the money goes there, then it will not come back because till redemption it will be lying there only. So very small, minuscule of the amount, will come to the secondary market actually. So thereby the liquidity will be very very low. That's why I always request municipalities should try and do public issue of bonds, but it will be very tedious for them also. It's because they are themselves struggling to issue municipal bonds for the first time. We cannot expect them to do public issue immediately. So people who have issued two, three times in private placement and they understand the market very well, then they can try and do public issue where you have a chance of, retailers can come and participate actually. So then the liquidity can deepen. So frankly speaking, I told you that online bond portals are there. Those guys are doing a tremendous job of marketing such securities. And Suraj Municipal Corporation, see, I picked it up from SEBI, very frankly, Rakesh. So I saw the draft prospectus there. I think only the merchant banker and the municipal corporation only can design and plan the bond issuances. So it has to get SEBI's clearance also. And I don't know for what kind of reasons they have, they're slightly getting delayed. But of course, they have, submitted the draft prospectus to SEBI. So we can expect anytime. Once they're, they have proper clearances and when they are very sure they can go for a bond issue, definitely they can come. So, should Dev Kachari, municipal corporation should have the same ratings benchmark as for the private corporations. See, ratings is, you should understand one thing, it is based on the respective municipalities' finances, accounting standards, governance, everything depends upon that. So every municipalities have a different rating and like other corporations are having, private corporations are having. And also that, as I told you, that it doesn't generally come with guarantees from central or state government. So that is also one of the negative. But in spite of that, they are able to get AA. As you told me, BMC should be, I think, AAA or NMDC or, New Delhi Municipal Corporation also is going to be AAA, I think so. So, for cash register automatically, so it's equivalently at par, it is rated at the private corporation. But definitely there will be a bias because they are municipalities or, somewhat, you can say the quasi-government type, even though there is no linkage between central and state government except receiving the grants, etc. But definitely, the ratings will be based on the own strengths of the respective municipalities, and very clearly, the accounting thing has to be there properly. Then only you can see what kind of a rating they can get. And Anurag Arun asked about, is due diligence really required? I mean, no other bonds are asked for due diligence. What I mean is that SEBI has very clearly said this is for private placement of bonds. In case if you want to have a 10,000 rupees denomination, proper due diligence. This is the responsibility of the merchant banker has to do a due diligence. So because since it is, see, the purpose is that what they are saying is that since it is private placement, and it is going to the retail investors because the face value is going to be 10,000 rupees, and a proper due diligence is a must. That's what, SEBI, it's advising that in case if you want to do see, simple merchant banker means that, then what is the use of it? Just give a mandate to the merchant banker and who has got a SEBI license and do a issue. That is not going to help. So it is with a few lines they're given is that there has to be some kind of a responsibility has to be for the merchant banker who are doing this in case if it is going to be down to. So I have not seen many 10,000 issuances coming in private placement. So people may prefer public issue only in case if they want to issue a 10,000 so that directly retail investors can do it. So you may check it the regulations fully once more. There are one or two lines mentioned about this on these things. Dev Kachari is asking, InvIT-like structure as being envisaged for ULBs for financing agencies such as NAFED, World Bank, ADB, wherein different assets can be pulled in. So it is possible, definitely. InvIT kind of a structure is definitely possible. But again, you understand InvITs now, if it has to completed project has to be there and the project has to be, revenue has to be there. So InvIT generally comes with a AAA rating. So I don't know whether municipalities finished projects and what kind of a revenue will be there, because they used to be around, even for a cycle parking, let us ask them, car parking, etc., they charge around 20 rupees, 30 rupees. How much revenue can they can make it? So, so there are things, we have to see that, they can definitely try, they can definitely do, no problem about it. But whether they'll get a AAA rating, etc., just like other inmates, I don't know. Thank you. Kilari Parthasarthi. Okay. Can individual investors can invest? How individual investors know the municipality is offering a bond? Public issue definitely will come to know in newspapers, no doubt about it. Private placement is very difficult to come to know because it is been offers only to the invited individuals only, invited persons only. It is go on invite only, so it goes to only to institutional investors, not to retail investors. However, it can be offered in secondary market through online bond portals or a brokerage house, whatever it is. Okay. So, yeah, Anurag, I can understand that it is a very tedious job for ULBs, but that's why I said, nah, they may not look for a 10,000 rupees bond issue or private placement. That's why I am not seeing any 10,000 rupees denomination in private placement, but public issue mein to aayega. But over the period, I think slowly, once they learn about it, they will come. Initially, now itself, doing a bond issues is a big job for a ULB, for municipalities. So getting into due diligence, etc., is going to be very, very difficult. I'm very sure about it. And here, the webinar chat, somebody is asking about uh, rate of interest. I told you, it can be somewhere between 7% to 8% on a municipal bond, depends upon the rating and depends upon the municipality's standards or accounting, finances, etc. So it varies actually. It generally comes in semi-annual rates. So you have to look at it, what kind of a rate. Now the interest rate is going down, it may be low, but in general, I've seen that it comes to between 7 to 8 and off, depends upon the ratings. So Shubham Singh, like state issued bonds are secured by state government or municipal bonds are backed by. That's why I said it is not backed by state government. It is not guaranteed by central government or central government or state government till date. Okay. And they will not do all this. It's going to be very, very difficult. But maybe in case of pooled municipal bond, where 5 or 10 municipalities coming together or putting five, they need requirement is only 5 crores, 10 crores for a municipalities. Their state government has to create an entity and then they can raise funds and give it to these municipalities. There definitely is possibility of state guarantee is possible. I won't say it is definite, it's possible. So that's all. So one more, the interest, no. Interest is taxable, just like your bank deposits. So it is for any bond per se. or any bond issued in the market till now, it is all taxable bonds only. Even the same thing applicable for municipal bonds too. Of course, a lot of people asking that any tax benefit or etc. But I don't think so. Nowadays, government is not very keen to give tax-free instruments nowadays. So even they are slowly removing all tax benefit from existing instruments also. For example, MLDs, etc., has been given full tax and thing. Even debt instruments, mutual funds also is now fully taxable and everything. So on that basis, slowly going away. So they cannot expect. But definitely, there are some thing I always think about on a generic, not only for municipal bond per se, this is municipal session, but in a bond issuance also, I always feels that there can be some kind of a to encourage retail participation. Government can say that in case, because a lot of low rated bonds are coming and people are investing through OBPs, etc. I always feels that how many retail investors are going to invest in such kind of a bond. Slowly, the market is developing. If you want to deepen further, instead of giving a tax receipt or something of that type, at least make sure in case of any default or in case of any company is closing down, something of that type. So where the government can say that the first priority to give it to retail investors, the first funds. So if that thing happens, I'm sure that almost everybody will get back all retail investors will get back the funds, and this will definitely improve the bond market liquidity also, and it will enhance the retail participation for these products. This is nothing. It's just, I'm talking about only in case of the company is getting closing down. At that time, if anybody retail investors are having these bonds, the first priority can be given it to the retail investors. This is going to help out definitely. Give a confidence to the retail investors also to invest more in this sector of bonds. So I think it is now 5:53. So Sahil, I think I answered most of the queries, and in case anybody wants, I'm available on LinkedIn or other courses also. You can connect with me.
Ideas and the one reason.
Sorry, come again.
So, sir, means are we good to end the session?
Yeah, yeah, yeah. Good to end. Now it is fine because I answered all the questions mentioned in the question answer session box also.
Okay,
So,
sir.
okay.
Yeah, okay, sir. I would like to extend our heartfelt thanks for taking time to speaking at this webinar. Your insight, expertise, and engaging presentation truly made a lasting impact on our audience. Thank you again, sir, for your time and knowledge. Thank you again.
Thanks so much, and thank you for giving opportunity NSM also, and thank you for
Yeah,
all the participants for attending this session. Thank you
yeah,
so much.
yeah. Thank you all for being part of it. Thank you.
Thank you so much. Bye bye.
Thank you, sir. Bye. Sir, now we can end the session.